Welcome back to Investing Talk Podcast.
Good to be back.
Today we're taking a close look at New Gold, NGD. You sent over your research on this Canadian-based intermediate gold mining company,
That's right.
and we're going to try and unpack what's been happening, what it might mean for investors listening in.
Yep. Got a range of info here. Company updates, stock stuff, industry trends.
Our goal, as always, is just to cut through the noise a bit and pull out the key things you really need to know.
Okay, so maybe starting with the basics, what exactly is New Gold?
Good place to start.
They're based in Canada, obviously, and they put a big emphasis on responsible mining practices. That's kind of their angle.
Okay.
Their main focus is gold and copper. They've got two core operating assets right now.
Which are?
The Rainy River Mine, that's in Ontario, primarily gold and silver. And then there's the New Afton Mine out in British Columbia, which is copper and gold.
Got it. So Ontario and BC.
Exactly. And their whole aim, or what they state anyway, is to build this, diversified portfolio, but always keeping an eye on the environmental and social side of things.
Responsible mining, as you said.
Yep.
Okay, so those two mines are the foundation. What's been happening recently? What's new?
Well, two main things jump out from the recent news. First is about the New Afton Mine.
Oh, yes, the consolidation.
Right. As of April 7th, just recently, New Gold announced they now own 100% of it. They bought out the remaining interest.
Interesting. Getting full ownership, that gives them more control, wouldn't you say?
Oh, definitely. It simplifies the whole management picture there. Potentially means faster decisions, maybe more flexibility in how they allocate resources at that specific mine. It's a significant strategic move.
Makes sense. And the second thing?
The second big thing is their upcoming results. They're set to announce their first quarter 2025 financials.
Why is that happening?
It's scheduled for after the market closes on April 29th, and then there's a conference call the next day, April 30th.
Okay, so April 29th and 30th. Investors will definitely be watching those numbers closely.
For sure. Earnings season is always critical.
Absolutely. And speaking of things people watch closely, let's talk about the stock itself, NGD. How's it been doing? Your research mentioned some pretty big moves.
It's actually quite compelling when you look back over the past year. The stock has... Well, it's more than doubled.
Doubled, wow.
Yeah. As of April 14th, the close was $3.59 a share. That puts the market cap around $2.841 billion, the total value of the company based on its stock price.
Okay.
And we saw some positive action just recently, too. It hit $3.550 on April 11th. So all this kind of points towards investors feeling pretty good about the company lately.
Over doubled in a year. That's
Yeah.
a huge jump.
Yeah.
What about shorter term, like the last month or 6 months?
Well, the past month has seen a bit of fluctuation, trading roughly between, say, $1.10 and $1.25, give or take.
Okay, some volatility there.
A bit, yeah. But if you look at the last 6 months, it's up about 30%. And compared to a year ago, when it was hovering around, Zero Laws in 85 or so, the growth is really quite significant.
Right. So what's fueling this? Why all the positive sentiment around New Gold right now?
It looks like a few key things are contributing. One seems to be improved operational efficiency.
Meaning?
Well, likely things like, better mining techniques maybe at Rainy River or more efficient processing at New Afton. Basically getting the gold out cheaper, lowering their costs per ounce.
Okay, internal improvements.
Right. And then there's that strategic move we talked about, consolidating New Afton. The market seems to like that.
Giving them full control.
Exactly. And then you can't ignore the bigger picture. The gold market itself has been pretty supportive. Gold often does well when there's economic uncertainty. People look for safe havens.
Right, true. The macro environment helps.
Definitely acts as a tailwind.
That makes sense. So company specifics plus a favorable market. Now, thinking ahead to those Q1 results on April 29th, what financial health indicators should people really be zoning in on?
The Q1 numbers will tell us a lot, obviously, but we can look back a bit. Their Q4 2024 earnings per share, the EPS, that came in at $0.07.
Okay.
Which was a nice turnaround from the -1 cent they reported for the same quarter the year before.
So a positive swing.
A significant positive swing. And it actually beat what analysts were expecting by roughly 16–17%. So strong finish to last year.
Okay, ended 2024 on a high note. What are the expectations going forward then?
Generally, analysts seem to be expecting revenue to keep growing, partly helped by these higher gold prices we've been seeing.
Right.
And some earlier reports pointed to a relatively low PE ratio for New Gold, price to earnings.
What was the number, roughly?
It was mentioned around 7.2 times their expected 2025 EPS, which was projected at about $7.38.
7.2. That is quite low compared to the broader market.
It is. And a lower PE can sometimes suggest, that the stock might be undervalued, especially if you believe those earnings forecasts are achievable. Investors might be paying less for each dollar of expected earnings.
Interesting. So potential value there if things pan out. What about debt? Is that something to keep an eye on?
Always. The sources suggested their debt levels have been, let's say, manageable up to now, but it's definitely something to check in the Q1 results, especially to see if that new Afton consolidation changed the picture much.
Good point.
And we'll also want to look for updates on free cash flow, the actual cash the business generates after expenses and investments.
Crucial for growth or shareholder returns?
Exactly. And also return on equity. These are key metrics for seeing how healthy the company really is financially. We need those upcoming statements for the latest figures.
Okay, it makes sense. So we've covered the company, recent news, stock, financials. Let's zoom out a bit. How does new gold fit into the wider market, the mining industry context?
Well, like we touched on, the whole mining sector is pretty sensitive to the global economy, right? And commodity prices.
For sure.
And right now, gold miners specifically are kind of benefiting from this demand for safe haven assets. Gold tends to get popular when people are worried about, inflation or recession or geopolitical stuff.
So that general economic uncertainty is actually a positive driver for them.
It often is, yeah. This wider trend definitely helps companies like New Gold. It's not just about their own performance.
Got it. It's a mix of internal and external factors. Now, every investment has risks. What are the main ones people should be aware of with new gold?
Well, the big one inherently is the price of gold itself. It fluctuates. If gold prices were to drop significantly, that would hit New Gold's bottom line directly. No way around that.
The commodity price risk.
Exactly. And then there's the regulatory environment. They operate in Canada, known for pretty stringent environmental rules. Any changes there could impact their operations, potentially increase costs for compliance, things like that.
Okay. And on the flip side, what about opportunities? Where's the potential upside?
Well, that new Afton consolidation is definitely an opportunity. Full control means potential for optimization, maybe extending the mine life, things they couldn't do as easily before.
Right.
But one point that came up in the research, sort of a potential concern, is the lack of announcements about brand new projects.
Ah, the growth pipeline.
Kind of, yeah. For long-term growth, mining companies usually need to be exploring, finding new deposits, developing future mines. Relying only on existing assets has its limits eventually.
So we'd want to see some news on exploration or future developments, ideally.
It would definitely provide more visibility on their longer-term growth path, yes. Even hints about exploration near their current sites or some stated strategic goals for growth would be helpful.
That's a really important point. Okay, so weighing those risks and opportunities, what are the key strengths and maybe potential red flags that stand out so far?
Strengths seem pretty clear. Solid recent operational performance, getting more gold out at lower costs, and also their stated commitment to sustainability, which matters more and more to investors these days.
And the red flags.
The main ones seem to be that reliance on commodity prices, which is true for all miners, really, but still a risk. And as we just discussed, that question mark around new projects for future growth.
Okay, let's talk sentiment. What are other people saying? Investors, analysts? What's the general vibe around new gold?
The specific social media sentiment data seemed a bit limited in the sources, but broadly speaking, gold stocks generally get viewed more favorably when the economy looks uncertain.
As we discussed, right?
Right. What's interesting is that analyst ratings seem quite positive. Several seem to think the stock is actually undervalued right now with room to go up.
So the professionals are leaning positive. What about individual investors?
It sounds like there's a sort of cautious optimism there. People see the potential, maybe like the gold exposure, but they're also aware of the wider economic worries that could affect any stock.
Understandable caution.
Yeah. And one thing that helps is New Gold seems pretty transparent. Regular updates, those conference calls, that tends to build some confidence.
Good communication helps. Okay, so analysts leaning positive, retail investors cautiously optimistic. How does New Gold stack up against the competition? The research mentioned giants like Barrick Gold and Kinross Gold.
Putting them side by side is useful. New Gold is more of an intermediate producer, right? Moderate market share, producing both gold and copper. And as we noted, that potentially lower PE ratio.
Compared to?
Well, Barrick is huge. High market share, much more diverse minerals, way bigger revenue. Kinross is also bigger, moderate market share, like New Gold, perhaps, but mainly focused on gold and often noted for having pretty stable cash flow.
So New Gold is kind of in that middle tier.
Exactly. Their focus on being an intermediate producer might let them compete effectively by perhaps keeping their costs lower than the really massive players. It's a different strategy.
Right, carving out their niche.
Yeah.
Right, that clarifies their position. So finally, let's wrap it up. Looking ahead, what's the outlook? And based on everything, what's the summary recommendation from the research?
Near term, the big catalyst is definitely those Q1 results on April 29th. Everyone will be watching those. Any updates on exploration around their mines would also be really key for that longer-term picture we talked about.
And the risks to watch out for going forward.
Still those potential regulatory changes in Canada or, a big shift in the global economy that might suddenly make gold less attractive. Those are the main external factors.
Okay. And the bottom line.
Yeah.
Based on the available info, what did the research conclude?
Considering the factors we've discussed, the strong recent performance, the favorable gold price environment currently, what seems like manageable debt from past reports, and solid operations, the overall summary recommendation leaning out of the research was a buy.
Okay. A buy recommendation based on the current picture. So, recapping, it seems New Gold's made some interesting moves, especially getting full control of New Afton, and the stocks certainly reflected some optimism.
Definitely highlights to consider.
Eyes peeled for those Q1 earnings on April 29th then. That should give more clarity on the financials and maybe some hints about the future. It'll be interesting to see how they address those points about relying on gold prices and the need for that future growth pipeline.
Absolutely. Those results and the call afterwards will be very telling.
As always, remember this is just our discussion based on the research provided. Definitely do your own thorough homework before making any investment decisions.
Essential advice.
And hey, if you found this breakdown helpful, please do subscribe, give us a like, maybe leave a comment. Let us know if there are other companies you'd like us to look into.
We appreciate the feedback.
Thanks for tuning in to Investing Talk Podcast.